Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate finance to reveal the juicy details. Today we're re-diving into Genenta S.p.A. As latest financial report, and let me tell you, they've got some 6-month numbers that are worth a look. Before we jump in, if you love digging into the real story behind company financials, make sure you hit that subscribe button. And hey, we've got a growing community on Discord to dissect these filings further. Join us through the link in the description. So Genenta S.p.A. has put out a report detailing their finances for the 6 months ending on the 30th of June 2025. This is to your everyday update. It is a Form 6K, which means they re-giving us a peek behind the curtain on specific company events. And in this case, it is their mid-year financial performance. Think of it as a progress report card for the first half of the year. The main event here is their financial results for the first half of 2025. They not just handing us numbers, they are providing the context behind those numbers with their management, discussion and analysis. More on that in a bit, but first let's talk about where these numbers are coming from. This is the big one, the actual financial statements for the period. These are unaudited, which simply means they haven't been given the final stamp of approval by an independent auditor yet, but they give us a very good snapshot of how the company is doing financially. We're talking about their assets, what they own, their liabilities, what they owe in their equity, which is the owner's stake. We also get to see their performance over that 6-month period. This includes their revenues, their expenses, and ultimately their profit or loss. It is important to remember these are for 6 months, so they are a snapshot, not the full year picture, but they give us crucial insights into the company's trajectory. Now this is where the story gets interesting. This section is like the company's own explanation of their financial report. They'll tell you why revenues went up or down, they'll discuss any significant changes in their expenses, and they'll talk about their overall financial health. It's crucial to read this alongside the numbers because it provides the narrative, the reasons behind the digits you see. It helps us understand if the company is performing well because of smart business decisions, or if there are external factors at play. They might talk about new product launches, market trends, or even challenges they faced. And for the tech savvy out there, this report is also available in inline XBRL format. This is a way of making financial data machine readable so it is easier to analyze automatically. It includes incredibly detailed information like the consolidated balance sheets, the statements of operations, and comprehensive loss detailing their profit and loss, the changes in shareholders' equity, and the cash flow statement showing how money moved in and out of the company. The notes to the consolidated financial statements are also vital. They explain the accounting policies and provide further detail on the numbers presented. Okay, let's get to the good stuff, the actual numbers and what they mean. We're re-looking at Genenta S.p.A.'s performance for the 6 months ending the 30th of June 2025. While the filing doesn't contain specific figures in this initial part, we can infer the critical areas they are reporting on. Typically in a financial results announcement, the company will highlight revenue growth or decline operating expenses and profitability. If revenue numbers are up, it means they are selling more products or services, which is generally a positive sign. However, we need to know by how much. A small increase might just be keeping pace with inflation, while a significant jump could signal market share gains or successful new product introductions. Conversely, a dip in revenue could indicate increased competition or a slowdown in demand for their offerings. Operating expenses are also key. These are the costs of running the business, such as research and development salaries and administrative costs. If expenses are growing faster than revenue, that's a red flag. It means their costs are eating into their profits. Smart companies manage their expenses effectively, especially in challenging economic times. Profitability is the bottom line. Are they making money or losing it? For a company like Genenta Science, which is likely in the biotechnology or healthcare sector, research and development costs can be very high, so it is not uncommon for such companies to report losses, especially in their earlier stages, as they invest heavily in developing new therapies or technologies. The question is, are these losses narrowing? Are they making progress towards profitability, or are they widening, indicating a potential struggle? The management discussion and analysis will be crucial here to understand the reasons behind their profitability metrics and what their plans are to improve them. We also need to pay close attention to cash flow. A company can report a profit on paper but still run out of cash if they are not managing their cash flow properly. This means looking at how much cash they are generating from their operations, how much they are spending on investments, and how they are financing their activities. Positive cash flow from operations is a strong indicator of a healthy business. Now let's consider the broader implications. Genenta Science S.p.A is likely operating in a highly competitive and regulated industry. Their financial results will tell us how well they are navigating these complexities. Are they investing wisely in research and development to stay ahead of the curve? Are they managing their regulatory hurdles effectively? The financial report will offer clues about their strategy and their execution. For instance, if they are reporting significant investment in R&D and a corresponding increase in their operating expenses, it suggests they are focused on future growth. We want to see if this investment is translating into a strong pipeline of potential products. If they are showing consistent revenue growth without a proportional increase in R&D, it might suggest they are moving towards commercializing existing products, or that their R&D pipeline is maturing. A key aspect to watch is their balance sheet. Are they heavily leveraged with debt, or do they have a strong equity base? High levels of debt can be risky, especially if revenues are volatile, as it increases the pressure to make debt payments. A solid equity base provides more financial flexibility and stability. What makes this report particularly interesting is the "for the 6 months ended the 30th of June 2025" aspect. This is a halfway point review. It allows us to assess their performance against their own goals for the year and to see if they are on track. If they had a strong first quarter and a weaker second quarter, their management discussion will hopefully explain why and what they are doing to get back on track. Or if they had a slow start and are picking up momentum, the report will likely highlight those positive developments. Looking at the signature side of things, it is signed by Richard B. Slansky, Chief Financial Officer, on the 10th of October 2025. This date is important. It means the report is coming out with a delay after the period it covers, which is common for financial filings, but it also means the information is relatively recent and reflects decisions made up until that point. So what is the verdict on Genenta Science S.p.A based on this filing? Without the actual numbers, it is hard to give a definitive judgment. However, the very act of filing these financial statements and accompanying analysis shows transparency and a commitment to keeping investors informed. The key is to carefully examine the forthcoming details within Exhibits 99.1 and 99.2. We need to see if their revenues are growing, if their expenses are under control, and if they are moving towards profitability or sustainable cash generation. The risks we should be thinking about in a company like Genenta Science are typical of the biotech sector. These include the high cost and uncertainty of research and development, the lengthy and complex regulatory approval processes, the potential for unforeseen side effects of new treatments, and intense competition. Opportunities might lie in groundbreaking therapeutic discoveries, unmet medical needs, and strategic partnerships. My take is that financial reports like this are crucial for understanding a company's health and direction. For Genenta Science S.p.A, this mid-year report is a chance to either reassure investors or signal areas that need urgent attention. It is a critical checkpoint to gauge the effectiveness of their strategy and their ability to execute. Alright, that is our initial look at the Genenta Science S.p.A filing. What are your initial thoughts on what this kind of mid-year report signifies? Let me know in the comments below. Your insights are always valuable. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate deep dives. And remember to join our Discord community linked in the description to continue the conversation. Thanks for watching Corporate Decoder. See you next time.